So here's the deal. This is the best trading strategy that I've created within the stock market. It's called a gap close reversal trading strategy. This is a trading strategy that I used last week to short the market at the exact peak right before it crashed at $432. Not only did I do that real time within Trader Society, but I prepared people for that in my trading videos multiple times. This is also a trading strategy that I used this year alone to make multi six figures profits. This is also a trading strategy that I helped create multi-millionaires within Trader Society. The beauty of this trading strategy is it's going to get you in at the exact peak of the market, right before it reverses and right before it crashes. You're going to have the advantage to buy those put options and go short at the exact top, buying the puts at the exact lows for a very lucrative day trading opportunity on SPX and SPY. I'm going to be sharing with you my step-by-step trading plan within this video. There's going to be about 2,000 people that watch this video. We have a member within Trader Society who day trades SPX with a larger account. He trades it so successfully and he has such big percentage wins on his account, he's able to make $100,000 in profits on one single day. We have other members who are multimillionaires. They're able to make 5 figures in one single day. We have other people who make a couple $1,000s to a couple $100s. With that being said, if we had 2,000 people take this trading opportunity and it ended up working out for them and they all had a green day, let's say the average, let's lowball it. Let's say on average it was a $500 profit per person collectively combined. That is a $1 million profit collectively as a whole if this trading plan works out. That's enough power to start a global tribe off just one single trade. With that being said, I am going to give you the trading plan and I'm going to share with you some of the basics to the trading strategy. But I need you to understand this. I do believe this trading plan will work even if you blindly trade it, but that's not what we're doing here. We're traders. We trade what we see. There must be some sort of confirmation to enter this plan. If there's no confirmation, then do not take the trade. But me personally, I'm likely just going to take the trade anyways because I strongly believe that this setup is going to work. But the best way to be successful as a trader is to actually trade what you see. It's just in terms of what I'm seeing beforehand, it's likely just going to work out. With that being said, let's get straight into it. I'll be sharing with you confirmations towards the end of this video so you do not blindly trade the plan and you trade what you see so you can actually confirm that it's going bearish as the market is opening and hitting this level. This is the trading pattern. So in terms of the trading pattern, you can see right here, what we're doing is we're going to simply analyze history. And you're going to see that some sort of pattern and some sort of history is repeating in a very similar way. I'm going to teach you the strategy first. There's a green daily candlestick right here. There's a green daily candlestick right here. There's a red daily candlestick right here. There's a red candlestick right here. There's a green candlestick right here. There's a green candlestick right here. Then these two candlesticks are identical. There's a red candlestick that closes in the middle. There's a red candlestick that closes in the middle. See how they're identical? This one's just a little bit bigger. Then there's a green bullish candlestick pointing up. Then there's a green bullish candlestick pointing up. The past 2 days have been identical, and the past 5 days have been very similar color coded, right? Some slight differences. History doesn't repeat itself to an exact T. Now, why am I showing you this? I'm showing you this because I see some sort of pattern brewing. And what I will be looking for is this. What happened the next day if history repeats itself? This is just one thing that I'm looking at. Right here, you can see the SPY ended up spiking first, then it crashed. How high did it spike? Well, on this day, it closed at $429.20. Then the next day, it ended up spiking to $432. So it ended up spiking 3 points and then it sold off hard, closing towards the lows. So if we do the math, you take the closing price of $424.66, you stack 3 points on top of that. If history repeats itself, it's supposed to try to crash at $427.66. That is one pattern that I see with the SPY, but it doesn't just end there. That's just one pattern that I'm seeing within the daily chart. This is where the strategy truly comes in. There was a gap that was waiting to fill above at $432. As you can see, the SPY had a massive gap down at $432. Then it ended up selling off the next day, having a multi-day drop for 2 days. Then just 2 days after that, it spiked from $422 all the way to $432. As soon as it filled that gap, it formed a red bearish 30-minute candlestick. Then it began to sell off and have a major crash, setting up for an amazing day trading opportunity if you were to buy puts and short the market at the gap. And as you can see right here, the same exact pattern is happening. There is a gap that is waiting to fill above at $427.30. And SPY has dropped 7 points from the gap. And it's already quickly recovering just like it did last time. This is the best trading setup. When SPY has a big gap down, it sells off for multiple days, and then it spikes back up just as fast as it ended up, gapping down and crashing. It spikes right back up. Then it's supposed to crash and drop exactly at the gap, turning this previous support level into the new resistance level, right? And you need to also understand that it had a bigger drop. This ended up dropping bigger than that level. You can see right here, it dropped to $418.80. So this just dropped from $427.30 to $418.80. You better believe me, when we go back up to fill the gap and this level right here, when this previous support hits, it's going to try to drop first and react as a resistance level. So this is my game plan for you. I have two levels to short the market. It is going to be a zone, right? And it should work. If you play this zone right, it should work, but don't just blindly trade it. This is the zone. The lower level is going to be the gap. Right here at $427.25, we're interested in going short and we're interested in buying put options. This previous support is supposed to react as a resistance and drop first, even if the SPY tries to push higher. It's also supposed to have a reversal at the gap like it has previously done. Now, the next best level for puts above that is going to be $428.30. This is pre-market highs. So it is a 1-point zone. Now, this is a day trading opportunity. The best and safest way to enter a day trading opportunity where you aim for a bigger profit is this is the best confirmation. You wait for a 30-minute bearish candlestick to close, and then you just buy the puts wherever the price is. Obviously, it's going to be a lot better if the price is at the zone. If it's at the higher level of the zone, if the price is in the middle of the zone, or if the price is at the lower level zone, it's going to be a lot better. But it might end up forming that red bearish 30-minute candlestick and close for you to safely enter with a nice best confirmation lower than the level, which is fine. You just need to make sure that that gap has filled first. If the gap fills, best thing you could do, wait for a 30-minute red candle. Then once the 30-minute red candle closes, 30 minutes red bearish, you do the puts. That's the best confirmation you can possibly use. Now, in terms of this trading situation, I will be using the 1-minute chart and I will also be using the pre-market chart. I'm not just going to be using the 30-minute chart, but in terms of a day trader, best confirmation you could possibly use where your win rate's going to be the highest and you're going to be in the safest play. You might not beat the best entry because it can drop first, right? But you'll be in the safest play and time it perfectly because it's likely going to work out because it's the best confirmation. Me personally, I will be looking at the 1-minute chart and all I'm going to be doing is just seeing if it's forming some sort of resistance, if it's forming bearish wicks, if it's forming some sort of roof towards my zone. And I will be scaling into that zone. That is my plan. Best thing you could do is use the 30-minute chart. I know how to trade, and I'm going to trade at that zone, and I am telling you, I will be in complete shock if this trade ends up being red for me. And again, I'm trading what I see. You might enter a trade towards this zone. Maybe you get stopped out. Maybe you didn't trade the way that I traded. Maybe you didn't trade what I'm seeing. Maybe you're just blindly trading a plan or you're trading something else. But me personally, I know what confirmations to look for. I know how to identify if a key level is reacting as a resistance. And it's very, very simple. And I teach it all within Trader Society. So that is my game plan heading into the market open. I'm going to leave it off at that tomorrow. I hope you guys utilize this because this is a household name opportunity. This is something where I put my name on and I will lose with this trading opportunity with honor. I'm not afraid to put it out there because like I said, this is the best trading strategy that I have to offer. And it works 80% of the time for me. And I'm not afraid to put out there the 2 times that I'm wrong. And just because this plan doesn't work out, say it doesn't work out, which I personally believe it's going to work out, even if you just blindly trade it. But that doesn't matter because I actually trade what I see. I don't just blindly trade what I believe, but there are things that I'm seeing beforehand where it's likely going to work out. But with that being said, I actually trade what I see, right? So we're going to crush it. We're going to absolutely destroy the market at this level. And it's going to be a very successful green day, most likely. I will see you to then. Like I said, this is a household name. This is something that I will die with honor. I know my risk. In terms of my risk, I will be risking 5% of my account on this particular trade, and I will be aiming for a bigger win. And if you're aiming for the bigger day trading win, you just need to understand that the way you protect your profits as a day trader is you set profit stops. It's going to turn your day trade into a scalping situation. Meaning, instead of selling into the move, and if the move continues to work out, you're going to be doing very, very well. And then once the move goes against you, as you're up, you're going to be stopped out for profit, turning your day trade into a bigger potential win, but still technically scalping in a sense, depending on how the market's moving. That is the best way to day trade, is to use profit stops. This is a situation where I would try to aim for the bigger win, and the best way to do that is to use the 30-minute confirmation. You can also just scalp at this level, or you can do both. You can scalp and leave some runners on. It's a rare opportunity, and this is an opportunity that I personally made over $10,000 trading just last week. So in terms of worst case scenario, I'll give back half the profits. I know what I'm doing. So with that being said, I'm going to be putting in 6 figures into this trading opportunity if I see a reason to get in. But like I said beforehand, I'm already seeing a reason to get in. I will leave it off at that. I always try my best to lead you guys in the best overall direction, and I believe this is the best thing that we can possibly do. And if it doesn't work out, then I get stopped out. Max pain is right here. You do not risk more than 428.80. And don't go taking some crazy position size. You have to trade by the day, and you have to trade to survive. If you have a small account, you shouldn't be putting in more than 10% of your account if you're doing 0 dates, right? And you should be scaling in into the zone, not taking the full size all at once. If you have a larger account, you shouldn't be putting in more than 5% of your account if you're scalping these, right? And, if you're doing further expirations because that's your style, then simply size in a little bit bigger to make up for the lack of big percentage wins. If you want, you can try SPX on this day trading situation. XPX is going to generate the biggest returns. And in terms of SPY, the strikes that I would be going with is a 427 strike. I would be doing a 427 strike. If I'm already in, I'm holding, and it goes to 428 and I see a reason to get in, then I'll add to a 428 strike and I'll add heavier to the 428 strike. If you're doing SPX, just go with a close strike. Wherever the 427 is aligned on SPX, that's the strike you're going with. I'm going to leave it off with that team. We're going to have a very successful green day whenever this level decides that it wants to hit. We will be prepared for it. It's likely going to be this week. It could be as early as today based off the pattern. We shall see, but I'm waiting to trade it.